2010, when I was coming back from US into the country, I thought India will grow very large and there's an opportunity I should not miss. If you go back, there were maybe about 5,000 total listed angel investors in the country. Today, our platform has 26,000 plus, far larger than what India had those days.
200 plus companies you have supported. How do you go about judging and making a bet on that?
Many founders pick money from angel investors outside because it's cool to do so. Because of Shark Tank or, oh, I've gotten money, I've got validation.
You also invested in Bluesmart?
Yes, we did. We did
and
in 2019.
This year it's all in the news.
Yes,
not
absolutely.
For some great reasons.
We never invested after 2019. We invested in 2019. We offered exits at 4 times the money to all investors. Many took it. They're happy today. Others did not take. They're on their own.
Today, when we talk about startup, everything is about fast exits, fast entry, making unicorns or taking a pivot.
Today is a world of 10-minute delivery. Everybody wants everything quick. But I don't think big things in life are done overnight. They need daily work. You can use technology tools to make it faster, but I think one needs to work hard and smart at the same time to build something big.
What is one red flag if you see about a founder? And tell me a trait which is a green flag.
Green flag is a hardworking guy. The red flag for us, we call them REL founders, which is rich, entitled and lazy. The guys we want to fund are PhDs, poor, hungry and driven.
On the outside, it's easy to romanticize with startup ideas, which turns into unicorn. But do you know what it really takes to spot an idea early on? Today, we have a very special guest, Vinay Bansal, founder and CEO of Inflection Point Ventures, an angel investing platform for early-age entrepreneurs. Vinay is someone who is quietly building the backbone of Indian startup ecosystem. Today, we go founders to founders. If you are building a startup, or dreaming of taking a leap, this episode is a must-watch for you. Hello, Vinay. Hi, thank you so much for coming in. It's my pleasure that you come to my home all over from Delhi. Thank you so much for that.
Oh, thanks, Nidhi, for having me over. It's a great weekend start for me as well, and a good Bombay weather.
Yes, great. So tell me about, first, I'm so curious to know, you have spent time at show floor. I would just go back. What would be 22-year-old Vinay would be most surprised about today?
What I'll be surprised about today, I don't think I ever thought I will be into investing and I'll be into investing for others. In fact, this is not something I knew about myself even 10 years back, right? So leave alone 25 years back. And I don't think I would have been an entrepreneur. It was never in my thoughts, nor in my family's thoughts, nor that's not how you grow up, at least 25 years back. So I think those are the two things which have been a surprise for myself as I look back 25 years.
तो आपने क्या imagine किया था? What would you become?
इतना तो पता था कि फाइनेंस करना है, नंबर्स अच्छे लगते थे, कि फाइनेंस में कुछ करेंगे. And that's why I chose to become a CA. My process और thought process हुआ कि ठीक है, किसी कंपनी में जॉब करेंगे, CFO बनेंगे, and that's where we'll retire from. ये नहीं सोचा था कि एंटरप्रेन्योर बनेंगे या इन्वेस्टिंग कर रहे होंगे या रिटायर शायद कभी करेंगे ही नहीं. So that's different.
And you have worked in Unilever, like both of us shared something which is very common, and also you worked at GE and TPG. And if you just reflect back on that career, what is your biggest learning on decision making and risk?
Decision making और risk, I think risk में तो ऐसा है कि अगर आप risk नहीं लेते हैं तो वही सबसे बड़ा risk है, right? I mean, जैसे कहते हैं कि a ship is not meant to be on the shore. It's the safest there, right? But it's not living up to its purpose. Similarly, in finance or in investing, अगर आप FD में, you're putting your money in FD or in cash balances, that's the biggest risk you're taking because inflation is eating it out. So to take risks is important in life, and that's the only way to grow. Now, in terms of decision making, I think हमारे लेवल पे या सीनियर लेवल्स पे हमें लगता है कि अगर ये डेटा मिल जाए तो फिर डिसीजन ले लेंगे. बट वो डिसीजन आपके पास इसीलिए आ रहा है क्योंकि डेटा नहीं है उसके ऊपर. अगर वो डेटा होता, पता होता कि क्या होगा, तो वो ऑटोमेटिकली आपकी लोअर ऑर्गेनाइजेशन वुड हैव टेकन दैट डिसीजन. तो डिसीजन मेकिंग it has to be done with 70-80% of data or lesser, and sometimes no data. Decision making has to be done by understanding your goal and understanding nuts and bolts of the business. तो अगर आपको नट्स एंड बोल्ट समझ में आते हैं और आपको समझ में आ रहा है कि आपका गोल क्या है, और फिर थोड़े बहुत डेटा से भी आप डिसीजन ले पाते हैं. परफेक्ट डिसीजन, परफेक्ट डेटा कभी नहीं होता है, गलत डिसीजन गलत होंगे. But I think अगर आप 70-80% सही decision ले रहे हैं, then you're good.
That's an interesting perspective. Now tell about your story of when did you really started that you have to become a founder, you have to start something of your own?
A formal decision probably came about 12-13 years back, but unknowingly I started my career as I was studying. I was teaching and earning as well. I had a coaching center. I would teach operations research, I would teach mathematics, I would teach statistics and accounts.
Really?
And so much so that company secretary rank ones came out of my batches. But that was just to kind of, make my ends meet, make my pocket money, so to say, and have a feeling of satisfaction that I'm adding value. And I was learning as well while I was teaching. But I think the formal decision came around, I would say, 2010, when I was coming back from US into the country. And I thought India will grow very large. And there's an opportunity I should not miss. So that's about 15 years back. The way it transpired into entrepreneurship was, in GE, you have this entrepreneurship simulations. So where you are put as the decision maker, you decide on various aspects of the business, and you basically run competitions on entrepreneurship. And I was winning it, one after the other, being in finance. So one day, our CEO, John Flannery of GE that time, he said, I think you have a flair for entrepreneurship, you should try. I said, I don't think so. So what he did is he made me the head of the health initiatives for GE India. And he said, okay, you go run it. I'll give you a team. And he gave me a team which was reporting to me, but were senior than me. So I was like, anyways, very anxious and nervous. But the numbers we posted on those goals in that journey, I think within 3 years, we were growing 200%, 100% every year. Our goals were getting met across the company. And it was an indirect or an informal role across the company because nobody was reporting to me formally. And then he said, Vinay, I think you're ready for entrepreneurship. You should think about it. And that's when I said, okay, I'll take a break from GE and probably go and learn entrepreneurship with somebody who has done it. And that's how I joined Wildcraft in Bangalore in a very entrepreneurial role. Parallelly, I started investing in startups. And when I joined, that business was maybe about 30, 40 crores per annum. Today, it does about 700 crores per annum.
Wow.
And, the founder was ex-GE, so it became easier for me to transition in. I was very concerned about ethics and, how we work and behave in Indian companies. So that was a big concern for me. But I think with that transition to Wildcraft, I got a very ethical company to work for, a great set of founders, a great culture, and a great way to learn entrepreneurship and business. So from there, I think that I never looked back, and I was very sure that I want to go into entrepreneurship.
Okay. The most surprising was that when you started actually a coaching institute and what was your age? Like 25, 26, right?
No, I was only 19 or 18 that time.
And how many students you were teaching?
My institute those days would have about maybe 80, 90 students.
Wow, that is incredible. And even Wildcraft has grown so well under your support. So you were the finance head for them.
I was handling finance, investments, technology, and a few other things. So I also launched a few products which failed. But yeah, I was trying to put my hands on various things. I very clearly remember, the founder asking me before joining, saying, Vinay, you are doing such a large business in GE. We are a very small business. We don't even have a headquarters. Why would you really want to join us? I said, I'm not joining for doing finance here. I want to learn entrepreneurship. And Siddharth was very surprised. He asked me that question 3 times in 3 different ways in 3 different interviews. But yeah, I was true to myself and I was true to him as to why I'm joining him. So I did good finance for him and I learned a lot of entrepreneurship as my first basic grounding principles there.
And what happened after that? After Wildcraft, you started which venture?
After Wildcraft, I went to TPG, which was the investing side into startups and also the turnaround side of startups. So with TPG, I think I worked for 5 or 6 portfolio companies. All of them practically went IPO. Except one which got sold at a much larger valuation. So, worked on RR Kabil, which went IPO, Campus Shoes, Dodla Dairy, then Vishal Mega Mart, etc. There I learned how to run larger businesses which are not yet public, but how do the promoters think, how do you turn around, how do you make changes, and how do you make large businesses go public. So that, and also I got to learn from looking at my colleagues, working with them as to how do you invest also. So that kind of completed my journey of both sides, working in a startup and building a startup, then helping the founders and the promoters grow larger and better. While also investing side, I got exposure to. So that's what completed my journey. Then I started a small, or I invested in, let me put it that way, and I would operate and run it also, daycare schools in Gurgaon. That was my real test of how entrepreneurship works. Of course, we folded that in 2020 when the COVID started. But I would say that was kind of the second venture, so to say, after my coaching venture. To learn another different set of entrepreneurship. And then came the CXO verse and then IPV.
You have a very impressive journey and multiple ventures. That is also very...
Yeah, I think every venture teaches you.
Every venture.
In different ways. And then you become better when you do the next venture.
Yes, great. You started IPV, right, in 2019.
Yes.
And 2019, and if I recall, back then, investing and angel investing was not so popular.
Yeah.
So first of all, how did you actually believe that yes, this will work? You will get many people like professionals to invest upon. Like how does the mindset shift between the founders and the investor work?
See, 2019, if you go back, there were maybe about 5,000 total listed angel investors in the country. The reports will say about 5,000, maybe 7,000 angel investors. Today, our platform has 26,000 plus, right? So it's like probably far larger than what India had those days.
Yes.
Piece of IPV, people sometimes say it's an overnight success. It's actually not. As I told you that when I came back to the country in 2010, I started investing in startups before I joined Wildcraft, right? So my journey and experience started about 15 years back. And by that time, I had known that I would want to do something in entrepreneurship. So I was zeroing in on this at that time. So the early stage investments that I did, I was investing in somebody, let's say working for me in GE, wanted to go out and set up something. I cut a check. I said, okay, resign tomorrow. Take this check as well, right?
Okay.
Right. And they did well. And they did really well. Those are small businesses, but that gave me a sense of, how even a small check can help somebody's dreams. We started cutting bigger checks, better entrepreneurs, etc. In 2014, we cut the first check for Milk Basket. It was few of us friends who came together and cut that check. And Milk Basket those days would do maybe 5-10 lakhs a month. Today's does 150 crores a month, right? It became a very large business over a period of time. Then we cut a check in 2014 to Fitso. Because I was a sports enthusiast, fitness enthusiast, I thought something like this should happen in the country. Fitso became big, got sold to cult later. So that gave us confidence. That honed our processes. We were trained in GE to be a Six Sigma enthusiasts. And therefore, every time we learned or every time we made a mistake, every time we got successful, we went back and saw what made it successful, what made it a failure, and we started building our processes out. By 2018, I had completed almost 350 years of investing experience and literature. I had read all of Warren Buffett's annual letters since 1965. I had read his mentors' books, whether it was Smart Investor and others by Ben Graham. I had read Fisher on growth investing. I had studied Rakesh Jhunjhunwala in India on how he invests because he was very vocal and he used to teach, and many other Canadian investors. So I absorbed all of what they were saying, what they were writing in many of the books. Like Warren Buffett would have at least 7-8 books written on him. I just picked up all of those, read all those, and started building it into my notes and my processes. So that's how we designed every part of the process by 2018. So it took, now you see, it's about 6-7 years of working through.
Like silently you were working behind the...
Working through while working in startups and helping startups. So I was getting practical knowledge also. Alongside. And by 2018, 2019, we were doing it with a friend were investing with us. And in 2018, we invested in BharatPe, which became a multi-bagger for us. In 2021, January, we returned 80 times the money we invested in 2018. 80 times return in 2 years was unheard of.
Yes.
And that's when the ball started to roll. The other thing I did differently was, earlier angel investing was only for large businessmen, right? Okay, I need 1 crore rupees to invest in a startup.
Yes.
And second, the issue was, if you invest in 10, one might work. I said, that's not...
1%
that's a gamble.
Yes.
That's a speculation. I said, no, that can't work. So what I did is, I built a process where that 1%, 2% success rate should go beyond 50%. We had to improve it by 50 times. And this 300 years of literature, learning, experience helped me build those processes. The second, what I did was, I did not go to businessmen. I said, people like me should be able to get these great returns. Professionals like chartered accountants, doctors, engineers, teachers, etc. And they should be able to start very small. So we said, you should be able to start at 1 lakh rupees and you should have a better success rate, right? And that's what we changed the whole paradigm. So our audience was professionals. Our audience were CXOs. And these professionals knew their jobs. They knew what the market is. They had the time to help startups to grow. And suddenly the whole paradigm shifted in the country. And the third thing we did is we said, we don't want to pick money from the market to run our operations. So we became practically the only firm which did not raise money to run our operations. And therefore we were disciplined. Now it was our money. And whatever we do with it, what we earn is what we spend. We don't have any other cash flow available. So that became a discipline inside the company. We invested behind talent. We ran our own course at a university from where we'll get a talent in the future. We thought about it in 2017. We started that course in 2017, 2019. The first batch we hired, and that batch still is with us. So that was 10 student batch that time. Today that batch is 100 plus. Today KPMG hires from that batch. Today Deloitte hires from that batch. WNS hires from that batch, and many other large companies hire.
How many you hired from them?
60% of my staff today is from there. So we hire a lot every year from there now. So yeah, that's the other partnership we built far before we started IPV. And today, when the CXOs and the professionals made money, they brought more with their word of mouth, and the platform grew. But I should also add that it's not that everything is hunky-dory. Failures don't happen. Failures have happened at our places also, and we learn from every failure. But I think in the end of the day, what we have to look at is, if we invested in 300 companies, have 250 succeeded or not, right?
So what is the percentage you have?
Our failure rate today is about 10%. We are built to handle up to 50, as I said earlier. Maybe we'll make more mistakes and maybe we'll get to 15% or so. But that's what 15-20% is what I think we'll now stabilize at for a long period of time. And I think that's a great success rate for any platform globally to have in startups area.
It's so true, because otherwise it's 1% or even 5%, right?
Absolutely.
Even the large private equity companies, they will invest only 5-6% will be successful.
Private equities generally have a higher success rate. Venture capital and startups have a far lower success rate, yes.
But then how did you actually manage to get 50%?
We put a very sharp filter on what we select. So if we are looking at 10,000 companies in a year, we will select only about 40. So that becomes a one big piece. But you need a lot of expertise and a lot of hard work to get to 40 from 10,000. But that hard work we put in. Now with these 40, as I told you, we have a CXO network, a large professional set available with us. Large number of these guys will work with these 40 companies to help guide the founders, help them build a business plan, help them be more successful. That's the work we do after we select these 40.
So you're actually tuning them for success.
Tuning them for success, giving them good insights on business, on corporate governance, even on integrity, value systems. And the third thing a good institution will do for it to be successful is find them jobs, right? That's what we do as well.
So find them customers.
Find them customers and find them investors. So we build the whole machine around finding them customers and investors. And that's what, when you look at the whole holistic play and a whole ecosystem play, that's when the success rates are far, far higher, or the failure rates are far, far lower.
I have an interesting thing to ask you. You have 200 plus companies you have found.
Now 300 now.
300 you have supported. And so many of them would have been, when you would have supported them, maybe just very raw, right?
Yes.
Only an idea.
Yes.
Or even just, the founder and the product, if it's not even existing.
Correct.
Then how do you go about judging and making a bet on that?
Yeah, sure. So early stage is the most difficult form of investing, right? At an idea stage, basically you are betting on the idea and the person behind the idea. Even more so, person behind the idea. How do you think about an idea? You think about an idea in the sense that, okay, is that idea going to solve a big problem, right? Which is unsolved today. And the way they're going about it is practical or not, right? Is that using something different that has not been used earlier, right? So that's still on paper. You don't know how it will get executed. And then you look at the founder. Why is he working on that idea? It was his personal problem, his parents' problem, or something else. Like we started IPV because it was our personal problem of, investing into, right, and making it better for ourselves. Similarly, let's say you look at parking problem in the country. We all know everybody has problems inside the society, inside the offices, on the road, in the malls, etc., etc. And there's a huge mismatch. Some places, when you're going to a mall, the mall you're going to might be very busy and one of the best malls, and therefore always full. But the mall next to it might not be working. Nobody's going there, but the parking lots are empty. So we met Amit Lakhotia. He was coming from working with Paytm and other large companies. He had scaled businesses there. He said, I want to solve the parking problem of the country.
So now the problem is real.
You know the problem is real. You have faced it.
Yes.
You know you face it every day and everybody faces it.
And also the founder is good.
Yes. Now you know the founder is good, etc., etc. Then we go back deep with him. Okay, help us understand how we'll solve the problem. Right? He'll say, this is the technology. This is how it'll work. Here is what I'm designing it to be. It was on paper. By the way, he did not even bring a presentation deck.
Okay.
Right? We just met in a hotel. It was like this, right? So he's explaining things. Yes. He said, yeah, it makes sense. So that's where you say, okay, here is one. We'll support your idea. Go now, put it on a pitch deck. Go start building your team and start building the first product out. From that day on, then Sequoia invested. Park Plus became a very large company. Yeah. You can pay through Park Plus when you're parking in a mall, etc., etc. And then they evolved over that, right? And this was 2018, 2019, right? And it's just 6 years. And that's how Park Plus has evolved. So in the story, you have looked at the problem. You have related to the problem. You know it's real. You know how it is going to be solved and then who is going to solve it. Right? All these pieces have to add up. Similarly, BharatPe. Right? Today, we say India does in one day more UPI transactions than what MasterCard does globally in digital transactions, right? But UPI was not that easy. 2018, it was not even known.
It actually has picked up after COVID.
After COVID, right?
Yes.
But 2018, when we were evaluating BharatPe, again on paper, meeting the founder, saying, okay, what are you going to do? He said, I'm going to do QR codes. Today, shopkeepers have 10 QR codes. You have to go to MobiKwik QR code, you have to go to Paytm QR code, you have to go to ICICI QR code, HDFC QR code to pay. And the merchant is receiving all this money in different places and not even receiving the next day. It's a pain for the merchant and pain for us to scan so many QR codes. He said, I'm going to make one QR code. It will work on all places. Merchant will have only one QR code. Money will go directly to his bank account. You don't need to scan too many QR codes. Any app you can scan from that QR code. And by the way, I will not even meet the merchant. Like what? How will he get the QR code? He said, I will give an online access to the merchant. He can come on my website. He can put his bank details, the IFSC code, the bank account details. He will get a QR code online which he can print and keep. Right? It was as simple. So you cut out all the men on feet, feet on street. You don't have to pay their salaries. It's become the DIY for merchants. It's a big win-win for everybody. You're cutting a lot of crap, a lot of waste. You're basically designing a Six Sigma process, right? We took 3 days sitting in our office, just brainstorming this idea. It was a very small office. We just started. And we said, okay, we'll bet behind you. And that's how you got in 2 years, as the COVID came in, even before it started working very well, the growth was phenomenal. We invested at about 18 crore valuation that time. Today, probably it's about 40,000 crore plus. And that's how, another large, great story comes around. Hopefully it helps you identify or figure out how we look at the problem, how we look at the process, and how we look at the founder to go after and invest.
Taking this further, what if you remember one of the story where you said everything is looking so great on paper, but then something is really a red flag for you not to invest?
So I think that biggest red flag generally for us is integrity and corporate governance. And we think that comes from how you think and what your intents are, right? Most of the time we are able to figure it out. So many of the times we have not invested when we found that there's some hanky-panky thought process, hanky-panky and integrity of the founder, honesty of the founder. I remember a story where, or maybe 2 or 3 stories where we were investing in the company at about, again, 18-20 crore valuation. It was 2019, right before COVID. They were into car repair business. We knew car repairs are all over, very unorganized. If it's organized, it will do very well. I sent my car which had a small defect. It came back within 4 or 5 hours, very well repaired with very low cost. I was impressed. But then they agreed on a term sheet with us. I think 22 crores. We were doing about 3 crores in investment. So 25 crore post money. We were taking about 12% in the company. Everything was signed off and the founder agreed to honor the term sheet. Next day, a large VC fund gave them 100 crore valuation and a large money. And the founder came back and said, I will not honor your term sheet. Or, you know what? Why don't you, few investors, Vinay, you can come on my cap table. Maybe, co-founders can come on the cap table, but I will not honor everybody else on the IPV network. We said, no, that's not how you honor your promises. If you want us, you will have to take all of us. Otherwise, we don't come. And we did not invest. But then the company came under a huge cloud of corporate governance issues, misappropriations, etc., and the company shut down. So that was one story which we thought we missed. But 4 or 5 years later, we figured out, it didn't work out.
Maybe that's the right thing.
And this happened in multiple other companies, not just one. When you invest in a great business, but the founder does not have high integrity or does not want to honor all stakeholders, then the business he may build great, but the investors will not make money, right? And that's important to understand.
But that is so difficult. I mean, I know Bharat is a great story, but we've been all hearing, right?
Yeah.
So that is where, again, because you backed on a founder at that point of time, things were all great.
Yeah.
What happens later on, you don't know now how the person will change, how the situation will change.
Yes, persons change, people change. We've learned that.
Yeah.
And that's when you should exit.
Right? I mean, I don't know. You also invested in Blue Smart.
Yes, we did. We did in 2019.
This year, it's all in the news not for so great reasons. Absolutely. But then finally, what happened? Did you make money or you lost money?
Yes, we exited. We gave exit options 2 times to our investors at about 4x. Many took it. We never invested after 2019. See, our success, how we define it at IPV, we come in at a very early stage, idea stage, POC stage, etc. And our goal is to take them to Series A when large investors come in. And our goal is also to give an exit at Series A when it occurs. If we are not able to give exit at Series A, then at Series B and then give an exit. Because after that, very large investors are on the board. And we are very small fish then. Founders will not listen to us. And they will probably do what large investors are saying.
Yes.
Right. So what we do is, when the Series A happens, we offer an exit to everybody. Right. And investors can take it or maximum at Series B. But beyond Series A, or when we give an exit, we tell investors, now it's up to you to choose to stay or exit.
You have done your part.
We have brought the company to where we thought we could bring.
Yes.
Right. After this, they're not in our control. We don't have the board seat. Investors can still choose to stay if they want. But our responsibility ends. So that's how we look at IPV. So in both, let's say Blue Smart, we invested in 2019. And we offered exits at 4 times the money to all investors. Many took it. They're happy today. Others did not take it.
But then the others it's their
they
own
decided
decision.
they're on their own. The second also in Bharat Pay, as you said, right? In 2020 December or 21 January, we offered an 80 times exit to everybody. Luckily, there were only few investors that time because that was one of the earliest investments. Everybody decided to exit with us. But there were many other people who were outside IPV who also came on board along with the same time as us, but none of them took an exit. They're all stuck today.
Yeah, that's a situation not so great for the investor.
Yeah, so it's important to know not only when to invest, how to invest. It's more important to know when to exit and how to exit.
Yes, there could be many such stories. I mean, these are some stories which are in public, but it's very difficult to balance it out.
Yeah, people get greedy. It's honest, right? I've heard, Blue Smart has grown so well. We started from 100 cars. It's now maybe 5,000, 6,000 cars. They'll continue to grow. It has already become 4x for us in 2 years. It will become another 4x in 2 years. It will become 16x. So I want to hold, right? But I think it's not an emotional decision. It should be a very rational decision. What's happened in the environment? what's happened in the books, what control do we have, and whether it may be the right time to exit. And that is a difficult decision, but one should think rationally and not emotionally.
Yeah, that's a great learning for me. And I am, as I shared with you, right? I've started my own.
Yes.
And if I think about all the founders who have started, first of the question, and which is in my mind, would be, when do you really seek funds from outside, especially from people like angel investors?
See, I think many founders pick money from angel investors outside because it's cool to do so.
It's cool.
Right? Because of Shark Tank, or I've gotten money, I've got validation. But I don't think that's the right way to think. That's an emotional way to think, right? I think the more structured or rational way to think is money comes from two sources. Comes from customers or comes from investors. First, somebody should look at getting money from customers. Because if that machine opens up, that's a permanent machine.
Yes.
Right? Because customers pay you for your product, you make profit. That profit gets reinvested and then you grow, right? In fact, historically, most businesses grew like that, right? Built like that.
Yes.
It's the recent past, last 40, maybe 30, 40 years globally and maybe last 10, 20 years in India that, early money is coming in. And we make it, we make a superhero out of it, we make glamorize it, etc., etc. But here is how one should think. First, are you doing or getting into a business which will become big and is solving a big problem? And if you are, then you should create value. If you're creating value, you should keep some value for yourself to grow, right? But then many businesses are such where you need a large fixed cost. Like in the older time, you were setting up a factory. You need land, you need plant and machinery, you need to invest first before the first biscuit comes out, right? So you need money for that. Historically, businesses will take loans from banks and build up their land and factory because that became a collateral to the banks.
Yes.
कल अगर आपने लोन वापस नहीं किया
तो
बैंक आपका लैंड प्लांट मशीनरी बेच लेगा और अपना रिकवर कर लेगा. आजकल के बिजनेसेस में क्या होता है? You don't have land, you don't have building, your servers.
Most of this is like out of SaaS companies and all. There is nothing like a physical product. But
you have servers, you have code. Code को कौन लेके जाएगा, right? And then you have people. Salaries are paid, they are done. Right? So you don't have a collateral. Now the banks are very wary. Okay, I don't have a collateral. How do I secure my loan? Yes. So that funding side is cut off. Government is trying to build some processes where you could take a 1 to 2 crore loan, which I think is a very good idea. Now the second piece is, should I put my own money or should I pick from investors?
Yeah.
Right? If you think that the business is going to be very, very large and you're going to cover it nationwide, let's say, or you're going to scale it very large and the founder has the capability to run a very large business, then I think it's a good idea to go out and raise money because you are capable, you'll know where to spend your money, you know which factories you're going to add, which stores you're going to add, and which products you're going to add, the kind of talent you will need for it, etc., etc. Then you go and raise money from outside. But if you want to build it a boutique business for yourself, or you think it will be a good cash flow business, and you don't want external interference or investors sitting on your board and telling you what to do, then probably you don't want to raise money from outside. And then there are businesses where you should not raise money. If it's a service business, high cash flow, but a very high touch point or non-scalable business. For example, and I could be wrong here, let's say you're running a hiring business. Where you have a very deep connect with customers, relationship-based business, you won't scale it too much, etc., etc. There you ideally should not, raise equity money because equity is very, very expensive. Equity is the most expensive form of capital.
Actually, that's something we should share with people because mostly people say कि equity का पैसा आ रहा है तो free में आ रहा है. बैंक आ रहा है तो आपको interest pay करना है. But equity का तो आ ही नहीं free में.
वो अभी शुरू में free लगता है, बाद में बहुत बड़ी cost होती है क्योंकि उसकी cost तकरीबन 30-40% होती है per annum, right? Because अगर आज आपने पैसा उठाया किसी से और आज मान लो आपने 10 करोड़ की valuation पे 1 करोड़ उठाया, वो आपने 10% of the business बेचा है उसको, right? He is now business owner with you, तो 10% of your profits for life go to that investor. दूसरा, अगर आप प्रॉफिट नहीं भी कमा रहे हो, डिविडेंड नहीं भी दे रहे हो, तो कल इसने जो 1 करोड़ डाला है, उसको तो उसके 2-3 करोड़ वापस चाहिए 2-3 साल में, राइट? अब आपको 2-3 करोड़ वापस करने के लिए 10 करोड़ और उठाने पड़ेंगे. सो यू आर नॉट गेटिंग इनटू दैट साइकिल ऑफ पिकिंग मोर मनी. एंड जब उसको आप 1 करोड़ का 3 करोड़ वापस कर रहे हो, बैंक को तो आप शायद 1 का 1.2 या 1.3 करते. अब सोचो 1 का 3 करोड़ अगर आप 5 साल में वापस कर रहे हो, क्या कॉस्ट ऑफ इक्विटी है? 40% के ऊपर होगी, राइट? एंड नाउ यू आर इनटू द ट्रेडमिल. सो once you decide to pick money from outside, that means you are ready to sell your business one day and therefore you will have to go IPO or sell your business to be able to give back returns to the investors or the equity investors that you have taken in. A less frequent but more, I would say, impactful way could be, even if you pick money, then can you return that money through share buyback, which means you still hold equity in the company, no other investors on your cap table, but for that you will have to build a very high cash flow business कि आप उसे 1 करोड़ का 3 करोड़ 5 साल में वापस कर पाओगे, and then you buy back your equity. But today Indian tax laws, I don't know why they have become very adverse to buybacks. Globally they are easy. Globally you can buy back shares. Today Indian tax laws are very cost heavy to do buybacks in the country.
They are like huge taxation.
पहले आप जो कमाते हैं उसके ऊपर से नॉर्मल कॉर्पोरेट टैक्स देते हैं, फिर जो कैश फ्लो बचती है उससे जब आप बायबैक करते हैं तो दोबारा बायबैक टैक्स देते हैं, तो डबल टैक्सेशन होता है. सो दैट रूट इज जनरली टुडे नॉट अवेलेबल, एटलीस्ट टुडे इन टुडेज लॉज इज नॉट अवेलेबल फॉर द कंट्री.
To summarize, सर्विस बिजनेस है तो बी वेरी केयरफुल.
यस,
इट्स लाइक नेशनल लेवल पे अब बहुत बड़ी प्रॉब्लम सॉल्व कर रहे हो, स्केलेबल है, देन यू सीक फंड्स फ्रॉम आउटसाइड.
करेक्ट.
अदरवाइज यू पुट योर ओन फंड्स. दैट वुड बी योर एडवाइस.
यस यस, क्योंकि जितना बड़ा मार्केट उतनी ज्यादा एडवर्टाइजिंग करनी पड़ेगी, उतनी ज्यादा मार्केटिंग करनी पड़ेगी, उतनी ज्यादा एजुकेशन करनी पड़ेगी, उतना ज्यादा अवेयरनेस करना पड़ेगा, उतना ज्यादा खर्चा लगेगा.
खर्चा तो लगेगा ही.
तो पैसे वापस तो बाद में आएंगे.
What would be your advice? What's something founders should be doing even before they prepare a pitch deck for taking to an angel investors?
I think Japanese में वो टर्म है ना इकागाई, कि do what you love.
Yes.
And do what you're trained in. तो I think 3 चीजें फाउंडर को ना अपने मन में क्लियर कर लेनी चाहिए. एक, जो मैं प्रॉब्लम सॉल्व करने जा रहा हूँ वो सही है कि नहीं, इज इट अ लार्ज प्रॉब्लम और नॉट. चाहे वो इंटरव्यू करे, चाहे वो उसने खुद यू नो ही इज गॉन थ्रू इट हिमसेल्फ एंड देन इज वैलिडेटेड इट फ्रॉम मेनी अदर पीपल एटसेट्रा. एंड सेकंड इज ही केपेबल टू सॉल्व दैट प्रॉब्लम एंड इज सॉल्विंग दैट वेरी डिफरेंटली. थर्ड इज, इफ somebody else is solving that problem, is he going to solve it 10x better or not?
Or is the market is so big that where he can also come in?
Yes, the market is so big, but then the existing player will also go to that market, right? So you have to solve it 10x better than somebody who's solving it, because you will take 10 years to build it. And in those 10 years, you know, if you're not doing it differently, then you will not win the market, right? These are some of the fundamental things that a founder should be very clear on when trying to solve the problem. Let's take a few stories or examples, right? अब आप मान लीजिए आप ऐसा कुछ लेते हैं जो हम सबने ही देखा हो. हम सबने IRCTC की बुकिंग करी है वेब पे जाके, और हमने उसके पहले सबने लाइन में खड़े होकर टिकट्स भी बुक करी है रेलवे की.
so painful. खासकर आप जाके अगर एज अ स्टूडेंट जाके खड़े हो, इट इज लाइक,
या आपने सिनेमा हॉल की लाइन में भी खड़े हो आप टिकट लेने के लिए, उसके बाद आपने बुक माई शो पे बुक करी है, राइट? अब जब बुक माई शो आ रहा है या IRCTC.in आ रहा है, उसे ये बहुत क्लियरली पता होना चाहिए कि अगर मैं, वही रेलवे है, वही कस्टमर है, वही टिकट है, वो प्रोसेस तो चल रहा है, कोई ना कोई तो चला रहा है उसको. अब अगर आप लेके आ रहे हो IRCTC, तो उस कस्टमर को आपको 10 गुना बेहतर एक्सपीरियंस देना होगा ताकि वो लाइन से शिफ्ट होकर आपके पास आए.
which is what they offered,
right? They offered you 10x बेटर एक्सपीरियंस. कैश नहीं कैरी करना, घर बैठे कहीं जाना नहीं, कोई लाइन में खड़े नहीं होना, और घर बैठ के इमीडिएटली टिकट आपकी आ जाती है. अब वो 10 गुना बेहतर एक्सपीरियंस है तो ये चलेगा. अब बुक माई शो का भी सेम ही है. अब मुझे ब्लैक में नहीं टिकट खरीदनी, मुझे हॉल के सामने गर्मी में खड़े नहीं होना, मुझे लाइन में नहीं लगना. आई कैन जस्ट सिट, आई नो विच सीट आई एम गेटिंग, विच सीट इज अवेलेबल, आई बुक इट एंड आई रीच देयर ऑन टाइम. सो 10 गुना बेहतर करा है एग्जिस्टिंग बिजनेस को एग्जिस्टिंग कंपटीशन से, तो आप चला सकते हो. इसको बोलते हैं डिसरप्शन. दूसरा तरीका होता है कोई नया प्रोडक्ट लेके आओ जो मार्केट में एग्जिस्ट ही नहीं करता है, राइट? जैसे पार्क प्लेस. पार्किंग प्रॉब्लम को सॉल्व ही नहीं कर रहा था, तो आपने एग्जिस्टिंग प्रोडक्ट उसको नया प्रोडक्ट लेके आ गए. तो दैट्स द सेकंड वे टू बिल्ड अ लार्ज बिजनेस. तीसरा होता है डिसरप्शन. फॉर एग्जांपल आप टैक्सी बुक करा रहे हो, राइट? आपको सेम टैक्सी वाला आएगा, आपको सेम कस्टमर हो और सेम कार है. पहले आप नीचे खड़े होते थे, फ्लैग करते थे, टैक्सी आएगी नहीं आएगी, कैंसिल होएगी, फोन करोगे, 2-4 दिन पहले करोगे एंड ऑल दैट स्टफ. बट व्हेन द फाउंडर ऑफ उबर हैड द सेम प्रॉब्लम, वो उसको खड़े खड़े टैक्सी नहीं मिल रही थी, बोला यार इतनी पेन क्यों खड़ी करनी है, लेट्स फाइंड अ बेटर वे टू सॉल्व, राइट? उसने ऐप बना दी उबर की. अब आप आराम से बुक कर लेते हो, सेम कस्टमर है, सेम टैक्सी है, बट टैक्सी की यूटिलाइजेशन बेहतर होगी और आपका टाइम बच गया, तो 10x बेटर हो गया. तो आप कंपटीशन में उतर सकते हो अगर आप 10x बेटर कर रहे हो, पर इसको स्टिल डिस्ट्रप्शन बोला जाता है, क्योंकि एग्जिस्टिंग कॉम्पिटिटर आपसे लड़ेंगे. टैक्सी यूनियंस लड़ने लग गई न्यूयॉर्क में या इंडिया में, एटसेट्रा कि ऊबर को इलीगल मानो, राइट? उसको हम जब डिसरप्ट करते हो आप एग्जिस्टिंग कंपटीशन को, तो एग्जिस्टिंग कंपटीशन फाइट बैक करता है, और जब वो फाइट बैक करता है तो आपका खर्चा बढ़ता है, तो आप उस वक्त रेड ओशन में होते हो. उन केसेस में आपका मनी ब्लीड बहुत ज्यादा होता है, एंड योर बर्न, जिसको हम स्टार्टअप लैंग्वेज बोलते हैं, बहुत ज्यादा होता है.
Let's अगर talk about most of your consumer products, right?
हाँ जी.
कुछ भी इतना अभी आजकल बहुत minor differentiation है.
हाँ.
But then there are like lots of brands which is happening.
Correct.
Or some of the companies you invested.
Correct.
You invested in some ice cream brands.
No,
Right? And what would be really, there is nothing which is disruption.
हाँ.
If I think about it. But you are still investing. People are still asking money.
Correct.
So tell us more on that.
Sure. तो बाहर से ऐसा लगता है कि सेम ही चीज है, कंज्यूमर है, सेम आइसक्रीम है, सेम कंज्यूमर है, क्या
सेम ब्यूटी प्रोडक्ट्स है,
सेम ब्यूटी प्रोडक्ट्स है, क्या नया है, राइट? सो कंज्यूमर बिजनेसेस इसलिए मोस्टली डिसरप्शन में आते हैं, और इसलिए उनमें पैसा बहुत ज्यादा लगता है. अगर उसको एक ढंग से बनाना है कंज्यूमर बिजनेस को, तो उसके लिए कुछ ऐसी चीज पकड़नी होगी जो एग्जिस्टिंग प्लेयर नहीं ऑफर कर रहा है टू अ कस्टमर हु वांट समथिंग. वो समझ में आना बहुत जरूरी है, और वो बहुत बड़ा होना चाहिए. अब आपने नोटो आइसक्रीम की बात करी. जब भी हम आइसक्रीम अपने पेरेंट्स को दे रहे होते हैं या उनको आइसक्रीम खानी होती है, तो हम क्या बोलते हैं उनको?
हेल्दी आइसक्रीम तो नहीं होती.
राइट? हम बोलते हैं पापा थोड़ा कम खाना, डायबिटीज है, राइट? मीठा है, राइट? सो बट द कंपनीज डिड नॉट थिंक अबाउट अ डायबिटिक फ्रेंडली आइसक्रीम.
So that's about the differentiation.
So when you say Noto, which is no to sugar,
okay,
now you brought in an ice cream which is diabetic friendly. And diabetics can have it, and India is the diabetic capital of the world.
Yes, actually.
Right? And you can serve it through quick commerce. Suddenly everything changes. Now I can have more ice cream. Now athletes can have it. Now the film stars can have it. Our parents can have it. Diabetics can have it, etc. Now it's a complete new product, and it's available to you in 5 minutes through quick commerce. So when both of these things combined, new infrastructure came in for quick commerce, and new kind of product came in. Now, an old style traditional ice cream player does not need to sell that ice cream कि मैं जाऊंगा लेऊंगा, and then also I don't know whether I'll get a diabetic based ice cream or not. Suddenly a new category emerges.
Even all the expenses, because I worked for the quality walls and all, right? You need to have so much infrastructure. Now with e-commerce, that is getting avoided.
That's getting totally avoided. आप नासिक की फैक्ट्री से क्वालिटी की वॉल्स की आइसक्रीम उठाओगे, फिर वहां पे फ्रीजर रखोगे, एट द एंड ऑफ द रिटेलर फिर पूरा सप्लाई चेन कोड लेके जाओगे, फिर 19 डिग्री से मेंटेन करोगे. ऑल दैट स्टफ is bypassed now. It goes from factory to the consumer very quickly. It's fresh. You don't need as many preservatives. It's better. So the whole infrastructure of the country is changing to give a better experience to the consumer, right? A fresher experience to the consumer.
It will be very difficult for you, right? Whenever you go, even just for coffee, you can have someone asking you or your team for money.
Yeah, it does happen, and you can't even say no. You have to be polite, and otherwise you'll be rude. So we recognized that, and what we did is we built a very simple process for anybody to apply. So you could simply apply on our website, or we have a link that we generally share, and we have a 10-day guarantee or a promise to revert to the founders if it passes the initial phase or not.
10 days, that's actually quick.
Yes, and every founder who applies gets that response from us. Either they get a yes, here is the next steps in the process, or no, this is why we are not going ahead. So yeah, generally I avoid. So I'll hear them out like for a minute, and then I'll give them a link saying, can you kind of send it here, and you will get back to you in 10 days. And I also tell them, if you tell me and if you want me to listen, I'll become a bottleneck because I'm going to another city from here. By the time I reach back, it'll be 10 days. So you choose whether you want to go a slow process with me or a faster system-driven process. Here is the link, you can apply. So that becomes far more easier, transparent, clear, and our teams can handle the whole process.
Okay, great. And when someone is actually preparing the pitch deck, you've liked about it, and then they go the next stage, you have there to ask money, and before that, valuation. Over the years, what are your learnings, some of the mistakes which founders are making while they're valuing their business?
Sure. I think overvaluation is a big mistake that founders make. And I learned it, as I told you, I went through 300 years of literature. And I realized that asking for a high valuation is a really big mistake.
It's a mistake people get proud of कि मेरा company का value is like now it's like so much huge.
Let's deep dive into it. What happens? Let's say you start a cup business, and you're a great founder, and somebody gives you 100 crore valuation on day one. Now you got the money at 100 crore valuation, you got 1 crore, you're spending it, and now you need more. you go to other, you say my last valuation was 100 crore and I was doing only 1 crore revenue. Like, no, now and I'm now doing 5 crore revenues, 5x, so I should get 500 crore valuation. Next, VC is going to say, no, you're only 20 crore, 4x.
Yep.
And now you can't pick the money at 20 crore. But you need the money to run the business.
You can't
right?
down
You can't do a down round.
Yes.
Many investors will ask, why is the down round happening?
That's actually a right signal also for many.
Right? Old investors will ask for more equity because
आपने 100 पे किया था.
आपने 100 पे किया था. And they have anti-dilution protection rights. Right? And the only thing needed to run the business is money. You need to buy more cups, you need to build a factory, blah, blah, blah. You need to pay your employees. And that is the only thing is not available to you now. You have the valuation, but you don't have the money available at that valuation.
Valuation is on paper.
It's on paper, right? So business shuts down. Right? That's a big mistake. In public markets also this is true. So when, Warren Buffett has documented it very well. He says that my stock of Warren Buffett, which is Berkshire Hathaway, should never be overvalued. He is not happy about making it overvalued. He is happy if it is a little bit undervalued or right priced at intrinsic value. Now here is why he wants it to be valued right at intrinsic value and not overvalued. He says that if my stock is overvalued today in public markets, anybody who is buying my stock today, I won't be able to give him returns in the future.
Exactly. वहाँ से growth या तो ज़्यादा नहीं होगा या फिर it could actually come down.
वहाँ से ना जाएगा public markets.
And then people get it's like creates a
So then those investors will not be happy about holding Berkshire Hathaway stock. So he says, no, my investors should always be happy holding my stock.
It's right? Like always a future which is going to be a better future.
Right. And the company is growing, the value will grow. So overvaluation is bad for investors and for founders. It creates a lot of delusion and it creates a lot of frustration and it creates a lot of angst saying my company grew, I put in the money, it's a great company, great founder, great business. Why am I not getting the returns? Right? So for a founder, it's important to value it right. It's okay to value it a little bit lower, but not okay to value it high.
Actually, this is quite a lot of perception in the market.
Yeah.
And the learning from you is don't strive for overvaluation. Actually, strive for the right valuation.
Absolutely not. It's only a short time steroid injection, which founders will feel great about, but nothing in your bank accounts. And I'll tell you, the best founders never go for valuation. They go for the cash that they need in the next 2 years. Let's say Bharat Pay, right? He did not set the valuation at all. He said, Vinay, I need this 2 or 3 crore rupees. This is what I want to do with these 2 or 3 crore rupees in the next few years. I don't care what valuation you give. Whatever all investors decide will be fine. So he created a perfect market where the market decides the valuation. भाई जब आप अपना प्रोडक्ट बेचते हो तो मार्केट कंपटीशन तो डिसाइड करता है ना आपकी प्राइस. सो कंपटीशन डिटरमिन्स द प्राइस. द मार्केट शुड डिटरमिन द प्राइस, not the founders.
Market determines the price, but even then it's also good for you because if someone good is coming and offering you a reasonable deal, you take it.
Absolutely.
What would be like the mistakes which founders are doing while they negotiate? Now they have determined or value, or you say the market determined, but there's also negotiation happening, right?
Yeah.
What is the percentage they are ready to dilute?
Sure.
Then what are those common mistakes?
See, mistakes कहाँ होती हैं हमारी जिंदगी में? I've had the privilege of learning from so many founders also, and then realizing the impact later. We make mistakes when we think short term, and that short term is not in tune with the long term. अभी अगर मुझे सुबह, if I have to maintain a healthy weight, I must get up in the morning and go for a run or a walk or an exercise or a gym or a yoga, right? But what does the mind tell me? You slept late yesterday.
आराम कर ले
आज. Sleep is also important, right? I'm telling you where the mistakes occur, right? Now you know in the long term it's good for you, but in the short term you took a easy way out, and that's a mistake. Most mistakes fall in this category. You know the consequences, but in the short term they are very tempting, but they are against the long term interest.
नहीं पता होता फाउंडर्स को भी. नहीं, आपको 200 प्लस इन्वेस्ट कर रहे हो, लर्निंग हो जाएगी.
नहीं, मैं आपको बता रहा हूँ, मैं उसको सिखा रहा हूँ. मैं तो बैठा हूँ ना सिखाने के लिए. उसको बता दिया, फिर तो पता है ना. ट्रस्ट, राइट? तो कई बार हम डील छोड़ भी देते हैं, उसको समझा देते हैं कि ये ऐसा होगा, समझ लो, आपको लॉन्ग टर्म में हर्ट करेगा, आप सोच लो. सो फॉर एग्जाम्पल आप समझ लो, आप there are 3 co-founders who are starting a business. They come to us for funding. पहला शुरू में हम तो early stage fund करते हैं, and they'll say, all of the shares are vested with us on day one. Well, you have not even started the business yet. And you know what? The money is mine. You have not even put your money in.
पैसे आपके, कंपनी हमारी है ना.
Right. And then, the founders will fight to thin nail, saying, no, we should have full, shares. They belong to us, 3 of us, 33% each, blah, blah, blah. Fine. And let's say we agreed. We'll teach them, no, it's not a good thing. You should vest over a period of time as you work through it and build it out. Because IPV we built like that. We didn't vest ourselves also. And we never took money from outside. Still, we didn't vest. After a year, one co-founder leaves.
And then he's taking 33%.
Now he's taking 33% share out.
The other 2 will have a problem.
Other 2 now will have a problem. 33% is gone and we can't offer ESOPs to the other employees. My stake is less. 2 of us are working for the 3rd co-founder also. We are doing all his hard work also, etc., etc. No, you guys decided it. Right? You thought you are going to leave.
Yes.
And that he will work when you leave.
But then the other person
leaves. Now everybody has an incentive to leave. Where will the company be formed? You will lose it. Investors will lose it. Everybody is a lose-lose game. Right? So I think it's important to align things to the delivery we do and the value we create and be rational about it. Not time shut down. Oh, I want all my company today now. It's like killing the golden goose. I want all the golden eggs today and I want to kill it. And that's where the mistakes generally happen. And therefore, I think 2 or 3 stories that stick to me from my childhood in investing is don't kill the golden goose. Slow and steady wins the race. And the golden principle of treat others like you want to be treated. I think these 3 are very important principles, which were taught to us in,
these are timeless stories.
Timeless stories, very short stories, but timeless and very important stories in life.
And even in investing, they're so important. Now I'm realizing that.
Yeah.
So if I ask about the same question let's go about as a founder, I'm coming up for asking for funds, and specifically it's a first round. They've done valuations, etc. But are there any thumb rules on how much equity one should be diluting in the first round?
So dilution is a byproduct of 2 or 3 factors, right? First, we said earlier, कितना cash चाहिए अगले 1-2 साल के लिए. वो तो number fix हो गया. आपको पता है कि आपको business किधर लेके जाना है, उसके लिए कहाँ खर्च करना है, कितने employees hire करने हैं, servers कितने लेने हैं, ऑफिस का रेंट कितना होगा, 2 साल के लिए. तो अगली स्टेज में, क्योंकि 2 साल के बाद वैसे नहीं पता दुनिया क्या बदल जाएगी. तो 2 साल का प्लान करिए. 2 साल से ज्यादा तो सोचो ही मत शुरू में. एक एंड गोल होना चाहिए कि आपकी विजन क्या है, कहाँ पहुंचना चाहते हो, लेकिन प्लानिंग 2 साल की करो.
2 साल में कितना फंड चाहिए हमने
2 साल में कितना फंड चाहिए, राइट. फिर दूसरा ये होता है कि अभी आपका रेवेन्यू कितना है, कि आपका स्केल कितना है, प्रॉफिटेबिलिटी क्या है, ग्रॉस मार्जिन क्या है. वो एक सेकंड फैक्टर होता है टू डिटरमिन कि आप कितने बड़े हो सकते हो या कितने बड़े हो अभी, बिकॉज दैट इज उतनी बड़ी वैल्यूएशन डिटरमिन होती है. ये हो गया कैश कितना चाहिए, कहाँ पे हो, रेवेन्यू वाइज कितना कहाँ जा रहे हो, तीसरा ग्रोथ कितनी लेके आओगे, राइट, और फ्यूचर में कितना कैश फ्लो जनरेट करोगे. इन 3 को जब आप ट्रायंगुलेट करते हैं दैट डिटरमिन्स द वैल्यूएशन. अगर आप 1 करोड़ के रेवेन्यू पे हो, प्रॉफिट कमाते नहीं और 10 साल के बाद भी 1 करोड़ पे बैठे रहोगे तो क्या वैल्यूएशन मिलेगी, राइट. बट अदरवाइज अ पार्क प्लस काइंड ऑफ अ बिजनेस और भारत पे जहाँ पे आप अभी शुरू कर रहे हो but you're going to grow very large, then the valuation will be higher, right? Now, from a dilution standpoint, अगर आप second, third round कर रहे हो, generally VCs कैसे operate करते हैं, whatever amount you need, that amount multiplied by 5 is your valuation, generally. Now, हिलेगी, मतलब ये हर जगह true नहीं होगी, but that is the general rule, thumb of rule if you want to ask for a thumb of rule for a valuation. But again, then founders will start manipulating it. अच्छा मेरे को 2 करोड़ चाहिए, मैं 10 मांग लेता हूँ, मेरी 50 की वैल्यूएशन हो जाएगी, राइट. सो एज लॉन्ग एज नॉट मैनिपुलेटेड. दूसरा वैल्यूएशन, बिकॉज वी आर CAs, वी अंडरस्टैंड DCF. You should be able to take the business out 5-7 years, discount it back, that's your valuation, right. उसके ऊपर आप कितना रेज कर रहे हो, होता है डायल्यूशन, राइट. बट क्योंकि अर्ली स्टेज बिजनेसेस हैं, नए तरीके के बिजनेसेस हैं, आप इनको फोरकास्ट ही नहीं कर सकते 5-7 साल के लिए, राइट.
Especially the ones are in tech now in AI,
Absolutely.
it's very difficult for you to estimate.
Yeah, and that's why DCF doesn't work, right. And therefore it becomes a game of largely conviction, where you think the business will land up, and therefore then discount it by the risks you have.
But as a founder, is there this is a thumb rule from an investor perspective.
Correct.
Now from someone who is seeking funds, should we dilute a single digit number?
Sure.
Or you're saying it's more governed by the funds you need, then it could be double digit or a
Absolutely.
high.
Now you've come to the right
Yeah.
piece, right? आपको कितना पैसा चाहिए वो तो पता है आपको. वैल्यूएशन कौन डिटरमिन करेगा?
The market.
मार्केट.
Yes.
जब आप पैसा डिवाइड बाय वैल्यूएशन करोगे तो डाइल्यूशन. आपको 2 करोड़ चाहिए.
Then you can then play on how much money you can self fund, etc.
Yes, आपको 2 करोड़ चाहिए. मार्केट ने आपकी डिटरमिन वैल्यूएशन करी 10 करोड़ की. 20% dilution.
But you advise 20% kind of dilution in early stages is good for the founders.
It depends. देखो जो कंज्यूमर बिजनेसेस होते हैं या जो डिस्ट्रप्शन वाले बिजनेसेस होते हैं उसमें डाइल्यूशन ज्यादा होता है क्योंकि उसमें आपका मार्जिन भी कम बचेगा. दे आर रेड ओशन बिजनेसेस एंड देन यू नीड अ लार्ज अमाउंट ऑफ मनी टू रन द बिजनेस. Therefore there the founders will not be left with much equity when they list. But जो ब्लू ओशन बिजनेसेस होते हैं जिनको हम न्यू मार्केट्स बोलते हैं या न्यू प्रोडक्ट्स बोलते हैं उसके अंदर मार्जिन अच्छे होते हैं और फाउंडर्स के पास बहुत हैवी स्टेक होता है इवन एट द टाइम ऑफ लिस्टिंग. लेट्स टेक एग्जांपल ताकि समझ में आ जाएगा.
रियल लाइफ में
आपको जितने आप बोलेंगे राइट. माइक्रोसॉफ्ट गूगल का एग्जांपल लेते हैं. दे हैव 80-90% मार्जिन बिजनेसेस. दे आर डीप ऑन टेक्नोलॉजी. दे डू स्टफ दैट नोबडी डज. दे डोंट हैव टू डाइल्यूट. They have a very high cash flow. They had to dilute because they were starting the business. It was a fixed cost business. They picked up money from investors.
Yes.
So they had to go IPO also. जैसे मैंने पहले बताया कि पहले एक बार भी अगर आपने पैसा उठाया तो IPO जाना पड़ेगा. Right? So they went IPO to give money back to the investors. But they still own a large portion of the business. Both Bill Gates in Microsoft or Google founders will own large parts of the business because they brought in blue ocean, new technology, new products. अब आप बात करें अगर रेड ओशन बिजनेसेस की या डिसरप्टिंग बिजनेसेस की. लेट्स टेक Zomato. The founder will have very little stake, maybe 1-3% stake. You pick up similarly Ola, very little stake, right? Any disruption business will end up with very little stakes
because you need a lot of funds.
You need a lot of money. You need a lot of rounds. You keep diluting. You keep picking more money. Business needs more money, and it's not very highly profitable because you're competing with the competition, etc. So your dilution becomes very, very heavy. So for an investor, one should see how much dilution will occur in the business he is investing because his money will get depreciated by that, while appreciated by the valuation. The net is what you will get. So consumer businesses generally end up, for example, diluting a lot or disruptive businesses generally end up diluting a lot. So दो बहुत अलग-अलग तरीके के thought processes हैं to invest and to create value.
That's a great perspective. Now to round up this particular section, I have a question like once we have taken the funds, someone has taken funds from angel investors, how we can completely take the benefits? Like you shared mention about the customers.
Yeah.
What are the other kind of benefits which can founders can seek to grow the business?
Sure. So business को क्या चाहिए? Business को customers चाहिए, एक अच्छा product चाहिए, उसके ऊपर founder को एक अच्छी knowledge, direction और support चाहिए. राइट. और इन्वेस्टर चाहिए. अगर वो फाउंडर हार्डवर्किंग है देन ही शुड लुक फॉर विच एंजल इन्वेस्टर्स विल बी विलिंग टू स्पेंड टाइम विद हिम. दोज आर रेलेवेंट फॉर हिज बिजनेस एंड हैव एक्सपीरियंस इन दैट बिजनेस. ऐसा बहुत जरूरी क्यों है? आपका जो बर्न होता है ना वो इसलिए नहीं होता है कि कि बिजनेस को बहुत पैसा चाहिए होता है. बर्न अदर देन द फिक्स्ड कॉस्ट बिजनेसेस तब होता है जब हम गलतियां करते हैं.
Exactly. Especially उनको नहीं पता होता uncharted territories, etc.
ये मैं मार्केटिंग कैंपेन करूं कि नहीं करूं, मैं यहाँ पे एडवर्टाइज करूं कि नहीं, मैं ये दुकान खोलूं कि नहीं खोलूं, मैं ये प्रोडक्ट लॉन्च करूं कि नहीं करूं, ये प्रोडक्ट चलेगा या नहीं चलेगा, मैं यहाँ एडवर्टाइज करूं कि नहीं करूं, यहाँ पे मार्केटिंग का पैसा दूं कि नहीं दूं. ऑल ऑफ दीज आर कैश बर्निंग एवेन्यूज. लेकिन if somebody can come and tell you that these 10 ideas where you're thinking of burning cash, 8 will not work. These 2 you can. Now you have brought down your burn from 10 crore to either 2 crores or profitable. So mentorship and guidance from the right angels who have the time and have seen the word is very, very important. One should seek out actively and build on it. Most founders don't even want to listen to others. Leave aside taking mentorship.
Because I think the perception may come as like, we know it all. We know our business the best.
Sorry. Then build a profitable business. Then why are you burning money? Then why did the mistakes happen that they happened in the last 2 years? Now you will still say today, I will not make any mistake. Everything will go hunky-dory. Doesn't happen. Or if you said you will do 10 crores in this year, why are you still at 4 crores? What went wrong? Second is, how do you open doors for your customers or for the businesses that you want to build with? and important to build it far before you need it. Because when you need it, then that customer says, आज तक तो मेरे से बात करने नहीं आया, आज इसको जरूरत है तो आया है. So he will also take you lightly. But if you build the relationship over a long period of time, then those doors are open for you when you need them.
So there are the two broad pieces. One is strive for mentorship,
Yes.
specifically in the area of execution and investments, and also seek support in terms of opening up networks and doors.
Correct. Absolutely.
So I think these are two great ways actually where a founder who is in early stage can really grow the business. And take really advantage of angel investing like yourselves.
Yeah, absolutely.
Thank you so much for sharing all of these perspectives. Now moving up to the section and your own investment journey. And tell me one story of investment which you believed but others didn't. And you went ahead and it was a great story.
I would say in India, no VC has been investing behind sports. But I knew sports because I play sports a lot, is the only addictive thing in my life. Sports is one addiction which will do good to you and to the society and to your well-being. And we know intuitively addictive businesses make money. Why? Your customers will come back to it without spending any marketing money and they'll stick. But when it came to India, nobody was investing behind sports as a business. And I said, kuch to gadbad hai. Then I researched a bit. Today we have a situation where we have to force our kids to go out and play and take them away from screens, right? And I think sports is a great way to make that happen also. And therefore, India was not investing behind sports. There was no infrastructure, and then sports coaches are not paid well. The sports academies are not paid well, etc., etc. Because the Indian consumer and parent does not focus on sports for their kids. Bekar ki cheez hai. They are not thinking it's good for health, and that's why India was putting money behind Byju's and education, right? Large valuations coming out of India. But I knew this will change because I was seeing it with my own health, with my own kids, a sedentary lifestyle that were coming in, a lot of IT janta coming in, having money now, willing to spend, etc., etc. So I started investing behind sports very early. Today, IPV has the largest number of portfolio of sports in the country among any other VC. Right? So I took a bet on Fitso, an IIT Delhi founders, 2014. Because nobody else was taking the bet. No competition to determine price. I determined the price. It was 7 crore in valuation and we funded. These guys went on to build a great business in Fitso. They built heated swimming pools, covered badminton courts, blah, blah, blah. And then they got sold to Zomato and then finally to CureFit at 350 crore valuation.
Wow.
Right? And that's what happens. When you have the conviction, you understand it well, you know great founders, and you're going against the grain. Nobody else is believing in it. You go and believe and you build it out and that becomes great.
I think you're also very fit.
Not very fit, trying to be every day. It's a difficult one.
Yeah. And on the other side, if I ask you a story of investing where you thought everything is great and you invested behind it and now you are regretting.
2 years back, another founder set, very good founders. They went through a personal family issue, husband, wife, when they had a kid. Both of them got pulled out. They were building a protein business and they came to our office and said, we don't think there's future for the business. Nobody's buying protein.
And now so
just 2 years back, right? The Zeptos and Blinkits of the world had not come into the scene. And I asked one question to husband, wife. I said, are you sure you will not regret this decision? No, you will not regret this decision. This business will go nowhere. We have spoken to all FMCG companies. Nobody wants to acquire us also. We were willing to fund the business, by the way. Saying, if you think you can run, we'll fund it more. We think it's a good business. And they shut down. But today, when I look at MyFitness and many other protein businesses,
protein bars and all,
it's large. And quick commerce has made it so simple to deliver. And now many businesses are built on protein. Look at the Whole Truth. They look at the whey protein. You look at the plant protein, etc., etc. And people need it. India is protein deficient. We think that these guys could have built a very large business if they are not, given up.
Okay, that is interesting. Vinay, you have spoken about building founders in health, wealth, and wisdom. Can you share more on that? How did you come up with this thesis and why it is so important to you personally?
Few things. I think anecdotally, बचपन में बोलते थे ना कि early to bed and early to rise makes you healthy, wealthy, and wise. I think that was a lot of wisdom there. That if you do things right in your day, and you utilize your sleep time well or your rest recovery time well, I think all three things are important and you will get all three. But as I grew up, one fundamental truth about investing became very clear. It's about time, and returns are always measured in amount of time. And therefore, I read an anecdote by Warren Buffett. He said that America was sold for only $25,000 in such and such year. And today it's such a large, maybe $100 trillion economy. And do you think that $25,000, if compounded at what percentage to become a $100 trillion economy? And it compounded at only 6%, right? From the $25,000. But it was the time that was available to become $100 trillion. And then, what we realize is that investors, by just living long, become very wealthy. Even if you're compounding at 10-15%, if you invest in living long, you'll be very wealthy. And therefore, health became a very important perspective. So one should invest in your health if you really want to be wealthy. And that's a common advice to everybody. And then as you go deeper, I think what you realize is that wisdom also comes along, as an important aspect of managing your money or wealth. Which is, you should know when to enter, where to enter, what valuation to enter, and then when to exit, etc. And you have to do it non-emotionally, right? Because if you get emotionally engaged, then you can't detach yourself. And then over a period of time, another thing emerged is I realized that there are 4 or 5 compounders in life. It's not just wealth. We always think, money compounds over time, right? We all know it. But I think there are many other things that compound over life, which we forget while thinking only about money. And therefore, to me, first thing that compounds is your health. It has to compound over time. And you have to invest in it every day. So health compounds. Wealth, we all know compounds, so I'll not take more time on it. I think the third thing that compounds is wisdom or knowledge. So that also is important, that you continue to invest behind learning and knowledge. Whether it's learning of the world ways, learning of your body, learning of finance, learning of businesses, learning of people. I think one should continuously spend some time, carve out some time every day to compound this knowledge. For investors, it's very, very important. So wisdom from that perspective also compounds. So all three compound, right?
Yes.
Fourth thing I think that compounds, which we often underestimate, is relationships. You meet somebody, you know somebody, you have known them for life. You can't forget that person now, even if you want to. And therefore, if you're investing your time in meeting people, in building relationships, they will also get you more of their network opened up to you. And that compound. It's called the viral effect. How one virus infected one person and engulfed the world. Similarly, people and your relationships compound. And I think it's important to invest behind the right relationships, the right people, high quality people, and then your network also compounds. And that's where, I'm very bullish about investing in network-based businesses or running network-based businesses, whether it's IPV, which grew by word of mouth or compounded by word of mouth, or on CXO verse side, which compounded by word of mouth as well. So I think relationships are the other pieces that one should invest behind. So yeah, that's the kind of theme behind health, wealth, and wisdom, and all knit through relationships. Absolutely.
Yes, very interesting perspective. Each of these 4 not only will help us in growing professionally, but also as a person, like
absolutely, and everything, your health, your wealth, and your wisdom. Absolutely.
Today, it's all about, when we talk about startups, right? Everything is about fast exits, fast entry, making unicorns, or taking a pivot.
Yeah.
But what is your learning over the years? Like how currently founders underestimate their own involvement in the business?
I think everybody, today is a word of 10-minute delivery.
10 minutes,
right? and a quick flick or a quick scroll. One of our businesses is now building 1.5-minute videos, and it's a rage. Right? I'm like, 1.5-minute video. But yeah, that's how it is. The reels today are big. So everybody wants everything quick. But I don't think big things in life are done overnight. They need daily work, daily perseverance, daily hard work, and daily building. Then you build something big. You can use technology tools to make it faster, But I think one needs to work hard and smart at the same time over a period of time to build something big. And founders need to think like that. Think about AI. It may be working very fast for you, but for Sam, it took him 10 years just working in the trenches to build out what it's out today, right? If he had given up somewhere in between, you would not have seen the OpenAI that you see today or ChatGPT that you see today, right? So that is required to work in depth, or as I said earlier, sweat in peace or you will bleed in war. And the second thing important in investing is you can't time anything. Just can't. And if I say, Bharat Pay would become 80x in 2 years, I would have probably put 10x more money.
The right timing, sir.
Timing you never know. There is never a timing that you can predict. You can predict the direction. You can predict the hard work. You can predict how you'll go about it. But the word will determine the timing and the opportunity window that opens for you. And therefore, one should not worry about कि ये 2 साल में होना है, 3 साल में होना है, 4 साल में होना है, और results के perspective से. But you should put timing to how much hard work will you do when.
Input पे timing होनी चाहिए.
Input पे timing होना चाहिए, effort पे timing होना चाहिए, उस पे sense of urgency होनी चाहिए. Output की आप timing नहीं determine कर सकते. Keep studying, keep working at it. One day you'll be the authority on the subject, etc., etc. And that's, I think, is very much important. What is important is the 10,000 hours of practice and study, right? That you have to put in.
So you believe in that?
Yeah, I do. I think when people put time and energy behind things, they start becoming better in that art. Learn from every small issue or success that you have.
Okay. And if I just ask about, for example, like you have done both, right? Corporate roles with Unilever, so many other companies. You have also done private roles in private equity with TPG, and now with your own businesses. If someone is at cusp of deciding and an inflection point, what would be your advice to the person, whether to really go deep dive into that?
So I think people want to, right? ऐसा नहीं है कि वो जाना नहीं चाहते, करना नहीं चाहते. They have a lot of shackles, salary hai, family hai, many other things, right? And that's a difficult one to break. I think one should get into the mindset and start imagining you are doing it, and then how it will be like, right? And start preparing for that imagination. You have to visualize how the day will be, right? How the hard work will be. How will you live when your salary is not coming? How do you come home and still handle the family? How will your family live through it? Prepare for the worst while hoping for the best. And I think that's the most difficult part. And I could be wrong. Some people can probably just jump in. But at my age, at 40, when you're jumping in, you need to think through all of these. And probably it's easier for a kid, no family responsibilities, probably is easier to do this. But you really need some knowledge, experience, expertise to be able to build a good startup. And we never picked money from outside, right? We made far lesser mistakes. We burned far lesser. We stayed far more disciplined to build out, what we wanted to build out. So yeah, but the journey is difficult.
Yes, and your journey is very inspiring. And also the learnings which you shared along the way. Now prepare for it and prepare in advance, and then you jump in. That's an advice from you.
Yeah.
So we have explored the big wins, the lessons which you have gained over the years, and so many wins and losers that you should mention, right? But now want to more curious about knowing what's the instinct behind.
Sure.
And no filters, huh?
It's a rapid fire, then it can't be filters.
Yes. So it's a rapid fire for you coming your way. So what would be one silliest reason you have actually rejected a pitch?
No founder details. I don't know you, so how can I fund you?
No founder details. Tell me more.
So on the pitch, you don't talk about who is the person running the business, and we are investing behind a person. So he's just forgotten to talk about himself, who the founders are. And the whole pitch is good business pitch, but without the details of the founders, that gets rejected.
Okay. Very interesting. What is one red flag if you see about a founder? And tell me a trait which is a green flag. Both are red and green.
You're taking my trade secrets out?
Yes. I'm curious.
Green flag is a hardworking guy, which wants to, make change in the world. Sometimes we find founders who are doing startups because of fun of it, and they come from rich backgrounds, and we know, the cost of failure is zero, which means if they fail, the parents will fund them. and therefore it's okay and not to work hard. So that becomes a red flag for us also. We call them the REL founders, which is rich, entitled, and lazy. And the guys we want to fund are PhDs. Which is poor, hungry, and driven.
Oh, wow. Poor, hungry, driven.
Yeah.
Okay. And one book which you would want to gift every founder?
To every founder, I would say it would be The Word of Mouth. I think that book is very underrated, but that talks about very fundamental truths of how to grow your business without spending money on growth. It basically says that the word of mouth is the best way to grow. And it talks about 100 ideas to do that.
Okay.
So I would recommend this to every founder.
Yeah, I'm going to read this now.
Absolutely, you should.
If angel investing has a tagline, what would be yours?
For us, it's everyone can grow with startups. And whether you are a professional, you are an investor, you are a businessman, you are a prime minister, trying to run countries, you create jobs with startups, you create innovation with startups. If you're an investor, you create wealth with startups.
Everyone can go.
Everyone
can grow with startups. When you are looking for investing, what is more important for you? Idea, story, or numbers?
The founder.
None of the three of them.
None of the other three. See, I told you, right? God throws the idea to three people.
Yes.
So idea is there. Idea is there with many others also.
It's about the person who is executing.
It's the person who is executing and the hard work. The execution is the game. If you bet behind a great founder who's picking up a great idea and then executing it, then you've got a business.
Okay. And what would be your one or two key advice to every founder?
Pick up an area of work which is a large problem for the world, which you think you can solve, and you can spend 18 hours working on it and still not feel like working.
It's like, do what you love.
Absolutely. Absolutely.
A pitch line that made you doubt immediately.
I think it changes with time. Today it is, I run my business on AI. 99% of the businesses don't have AI in them. They just use that word AI. So I am always doubtful when somebody says, we will use AI to build this. Then I'm always conscious to go in depth and check whether there is AI in it or not, right? Generally, it's not. It was the case, let's say 2-3 years back, when people say we'll use, we are a tech-driven business, while there are people sitting manually and doing stuff, right? Now we have AGI, artificial generative intelligence. So when people start using AGI, they're like, okay, do you even understand what AGI is? So yeah, those kind of, the buzzwords in town, which people end up using far more, then it makes me doubtful and skeptical to kind of go deeper in that.
If you reflect upon your 25 plus years of career, what would be one or two advices which you want to give to everyone, either it's a professional or an entrepreneur?
I think professionals, get out of your silos, and see the real world outside. It was true for me as well, and therefore I can say it with confidence. And also, with AI coming in, most professionals will retire at 40. You have still more 40 years to think about what you want to do, start planning for it ahead. And the second one was for
entrepreneurs.
For entrepreneurs, I think take calculated risks. That's your job, and continue to build things that the world wants. Solve some big problems.
Solving big problems, and for every professionals, really plan for something which is very different.
Yes.
That's my key takeaways. So thank you so much, Vinay. It's been amazing and really, really very rich conversation with you.
Same here.
And I have learned along the journey that if a startup has to raise money, specifically from angel investors, what are the do's and don'ts and how you really build a great business. Thank you, Vinay. It was such a wonderful conversation with you. And thank you everyone for watching this show. Join and subscribe to Pursuit of Finance and Leadership channel and follow us on Instagram at CA Nidhi Jain.